to make predictions, like I've said in the past, when you're in a situation where it's really complete chaos and nobody really knows what to do, which is why gold is getting the bid.
The zinc supply is facing a massive deficit. Mine closures are certainly putting a major upward pressure on the best performing metal of 2016. Right now, China has temporarily shut down 26 of its zinc mines until June of 2017. Zinc inventories are at their lowest level since 2009, and the zinc fundamentals could not be any more favorable as the world is facing a worldwide supply shock. The former president of the largest gold producer in the world just left the company to join a junior mining zinc play that is currently sitting on $9 billion of zinc and rising. Learn more about this incredible opportunity at crushthestreet.com/zinc.
Hello everyone and welcome into crushthestreet.com. I am Kenneth Amaduri and it is Saturday, the day after the Fed met and just blew steam, played both sides of the fence at Jackson Hole. And today we're going to talk about that, and we're going to talk about the money flow in precious metals and some critical price points where we can expect some major moves in these precious metals commodities. And there's nobody better to talk to about this than fusion analysis expert TraderStef. She's a returning guest. TraderStef, thanks for joining me today.
Hey, good morning, or actually afternoon. Thanks for having me back.
Depending on where you are in the globe, good morning or afternoon. Steph, as I said, this last Friday, the Fed met at Jackson Hole, and it would appear that they are playing both sides of the fences with their language. And in a headline this morning I saw, Bill Gross stated, Yellen's economy may never walk normally again. But more importantly, though, what are your thoughts on this meeting?
Oh, boy, what a day it was. No, that's an understatement. Well, look, it's like Yellen is holding a gun to the head of the world financial system. And it's fomenting a loss of confidence in the central banks and their monetary policy. So, I emphasized back in June during our interview that, the Fed is stuck. S-T-U-C-K, they're stuck. It's just like the commitment of traders reports and the commercials. The bullion banks, they're like kind of stuck too because the open interest continues to rise, and it's beginning to feel more and more and more like the movie The Big Short. The more we go along here, particularly in the gold market. But I also mentioned that the Fed and or the BOJ, the Bank of England, they're just going to deal with liquidity right now since Brexit, because that was the key phrase, unless some black swan comes along. So we got the paper caper in the Fed, who will most likely do nothing before the election. They've been jawboning. And by the way, there was this new white paper by a board staff member at the Fed, and Bullard, he was forced to discuss it on Bloomberg TV yesterday at Jackson Hole. It was actually at nighttime. They were outside, and his quotes were, "It's time to rethink the normalization plan." And then he was confronted with some questions about, the Fed's moves and their models and ZIRP, and none of it's working, and you have no inflation, according to their formulas. So he brought up the white paper, and what he emphasized was physical policy changes in Washington need to take place. The Fed can't fix this problem. Now, we all know this if we've been paying attention. But the thing about that white paper was more QE monetary stimulus. And on a Zero Hedge article, if I'm not mistaken, I think there was a number like $4 trillion that was thrown around in case we have a, quote, economic shock, a recession, or some type of black swan. So, look, in the minutes going back many, many months, Yellen has always said that even if they met their inflation and or employment targets, there would still be a lag in raising rates, and the underlying stimulus, which they continue to do with repoing the treasury bonds, and so that the balance sheet remains stable, they've just been flattening the yield curve, would continue. So her Jackson Hole statement was totally dovish, and I'm going to read it for you word to word. She said, looking ahead, the FOMC expects moderate growth in real gross domestic product. Yeah, okay. additional strengthening in the labor market and inflation rising to 2% over the next few years. Based on this economic outlook, the FOMC continues to anticipate that gradual increases in the funds rate will be appropriate over time to achieve and sustain employment and inflation near our statutory objectives. Indeed, in light of the continued solid performance of the labor market and our outlook for economic activity and inflation, I believe the case for an increase in the Fed funds rate has strengthened. Of course, our decisions always depend on the degree to which incoming data continues to confirm the outlook. Now, I find this interesting because then this is what happened. Gold rallied $20 an ounce, right? And then a half hour later, co-chair Fisher comes out and he says, hey, what she said just confirmed that we're going to have a rate increase in September. It's on the table, most definitely. So gold lost everything it gained. And then late in the evening, as I mentioned just previously, Bullard came on CNBC as well. And he says, quote, one rate rise over the next 2.5 years. And that's not all he said. He says, not until there's, quote, good news about the economy, unquote. And then he said, while there have been 2 good job reports, year-over-year GDP growth is very low. When they asked him if he believed the Fed's forecast was damaging our economy or losing, people losing confidence, he said, yes. I think that it's hurting our credibility. By the end of the year, we'll be 2 years into a process since QE ended. Now, lastly, what I'm going to say about Jackson Hole. Fourth quarter 2015 GDP was 0.9%. First quarter 2016 GDP was 0.8. Second quarter 2016 GDP was 1.1.
Steph, it's kind of interesting. I heard Jim Rickards say this, and right now the Fed has to choose between credibility and catastrophe. And one thing that I do want to bring up here are the disconnect in interest rates. And what we saw in December of 2015 was them actually raise interest rates. And in that same moment and throughout the year, we saw yields on the 10-year Treasury, they fell. So there was this disconnect between the Fed's funds rate rising and interest rates falling in the market. So I guess I just want to ask you if you think that if they do raise interest rates, which it doesn't look like they're going to do in September, what will falling interest rates, if it does happen again, tell us about the Fed's monetary decision?
Well, I would have to go back to what I was saying a couple of interviews ago, and that was negative interest rate policy. And I know you're asking a question about what happens if our rates falling. Well, they are falling, actually, right? Because if you take their inflation numbers based on their formula, we're already in real negative interest rates.
Mm-hmm.
We're already there. So that's a given. So let's just talk about NERP for just a few moments. So the gold market took off when? December 2015. That was the same time that Japan announced their negative interest rate policy and the Fed raised rates. Gold rallied, the dollar rallied, and bond rates stable, but they began to fall. And I know that from looking at my parents' retirement fund, which I manage, because it's been making a really great investment on bonds for the past 6 months. Now, there was an article on Zero Hedge just recently, and the title is, "It's Surreal. Negative yielding debt rises to $13.5 trillion. Look, it's clear that central banks are dominating the market. Everybody knows this. And then there's a loss of confidence, but there's a race to the bottom, and central banks are the main drivers. It's not fundamental, and that's what's pushing the stock market into highs. It's just, you stick with the trend. The trend is your friend, and it's hard to make predictions, like I've said in the past, when you're in a situation where it's really complete chaos, and nobody really knows what to do, which is why gold is getting the bid.
So, Steph, though, going back to the question, what does it exactly mean? What does it tell us when interest rates in bonds fall while the Fed is attempting to raise rates? What is the disconnect in that, and what is the market telling us?
It means that everyone is willing to take a loss on their investment for a safe haven. Because let's take Greece, for example, or any other country that's having financial problems, and all of a sudden the rates on their bonds start going through the roof. And they have to do that in order to attract investment into the country because the fear is so high and the issues are so bad, they have to offer a very high rate to bring that money in to continue the debt game.
And of course, that when people go into the bonds, that causes a demand for them, and the yields fall.
Correct.
Right.
And then the higher rate is just trying to get them into the bond market, and then that feeds on itself because then those who are willing to take that really high risk will buy those bonds at the higher rate. But that's a huge risk because, like for Greece, for example, you end up getting a haircut. Killing.
Steph, so let's move on into the gold sector. We know guys like Drunken Miller, Dalio, Icon have been buying gold. Big billionaires, they're on the list of people who have been getting into gold. And also on that list was Soros this year. But this year, it's been reported that he sold the majority of his investment in Barrick, and the largest gold producer in the world. So my question to you is, should investors be concerned regarding his moves away from gold?
No, I don't think you should be concerned because this goes into two areas. Number one, Soros is a globalist, all right? And let's talk about the election and what that's all about in a little bit. But the Soros fund was just making a typical hedge fund momentum play. And now some of those players are taking profit. That's just part of the paper game. But you're not hearing a lot of talk about who's still buying and why they're buying, which brings up billionaire Crispin O'Day. I'm not sure if I'm pronouncing his last name right. But most recently, I gave you a graph there, and he's thrown 86% of his firm's assets under management, otherwise known as AUM, invested in the gold contract in London out to the December 2016 contract. Now, let's just keep in mind that as of July 31st, you can go to his website. It's odey.com. And they have $9.3 billion of assets under management as of July 31st this year. Now, I'm not really sure how they have all that broken down, but you can do the math. Whatever it is, there's a lot of money that he has at least publicly announcing with regards to the balance sheet of the fund that is being allocated to paper contracts. So he's not convinced about the underlying fundamentals of the economy or the global financial system at all. And look, just as a side note, Charles Schwab, their latest white paper, their brokers are now suggesting a 10% allocation into gold, but they're pushing the GLD ETF. So back to Mr. O'Day. He says central bankers are, along with all of us, hoping that globalization bringing competition to bear across the world will overcome the political reaction to the pain of QE stimulus. If this fails, and it looks like it's failing, then Brexit and Trump will bring back inflation like the wind. In a world where $13 trillion of bonds are NIRP, negative interest rate policy, and $4 trillion of investments are in ETFs, it's wise that only $1.5 trillion of savings are invested to protect investors against a change in the weather. So he goes in and explains the difference between the global GDP and the worth of gold at its current price, and he's like all in, 86%. So let's talk about Soros.
Well, you know what, Steph? We know that Soros goes deep into the corruption of our system, especially with the DC leak of the 2,500 documents from Soros using his wealth to push this neoliberal, euphoria while creating global chaos. He's deeply tied into the Clinton campaign and the circus of an election we are having this year. And so I'd like to get your thoughts on this.
Oh, sure. There's a couple of roads here. And one of them is actually about gold. Because, Soros and the Soros Brothers Fund, they've recently been investing into digital ledgers. Now, everyone's hearing there's these, some companies are coming out with gold-backed debit cards, right? Mm-hmm. And I'm not going to mention any companies in particular of which one I may recommend or which one's doing this with Soros or who's not, but they're deep into that, and it's really about taking the physical possession out of your hands and putting it into a digital ledger and promising you that when you want it, you can take delivery of it. Well, if anyone listens to Jim Rickards, for example, you know that if you do that and some kind of event comes about, whatever it may be, you're probably not going to be able to take delivery or get your hands on that gold. Let's just talk about hacking, electronic hacking, or what's going on in the world today. Why would you want your gold tied up in some digital ledger, for God's sake? So Jim Rickards recently put out a, what would you call it? It's like an info documentary, and it was based out of Switzerland. And he interviewed a Switzerland gold industry insider. It's called The Gold Hoax. You got to look it up. You have to go watch it. Kind of long, but it's worth the watch. It's amazing. So Soros, he's totally involved with the election. Back in the day when I was in New York and I knew folks who were working for Obama's campaign, I handled those phone calls when they were being vetted for the White House. And it was Soros. And I handled a phone call that came through from Clinton with regards to the State Department. So I know firsthand that they're involved, and it's not some conspiracy theory. They are. So I got 3 words for you. WikiLeaks, Emailgate, and Clinton Foundation. Hillary and Bill, it's like Bonnie and Clyde. All the books and films that have come out recently, whether it be from Navy SEALs, Secret Service agents, rape victims, and Soros is considered a World War II criminal, and he's wanted in some countries. And he's one of Clinton's biggest financial backers. Matter of fact, there was an article that came out today talking about that early this morning. So let's put this into perspective. He's supporting that agenda. Well, you want to take away our Second Amendment gun rights. He funds the legal defense of Planned Parenthood after the recent scandal about selling body parts. Mm-hmm. We got the infiltration of the Muslim Brotherhood into the administration. We've got the DNC primary rigging. We've got them pushing for the end of voter ID requirements in order to vote. We got Black Lives Matter, which is described by Sheriff Clark as an anarchist movement. And he says the Dem Party, quote, has moved black people from the cotton fields after slavery ended and hoarded them into American ghettos for political power, unquote. The Arab Spring with the Muslim Brotherhood in Egypt, Libya, Benghazi arms dealing to the jihadis, ongoing refugee crisis, and a borderless European Union also bleeding across all borders or blatantly being shipped into the country while there's other people waiting in line to get into this country legally. We've got Senator Byrd from the KKK, who Hillary considered him her mentor. We got Bill with Hillary suppressing rape victims and defending rape criminals back in the day. We've got CRA law from the Jimmy Carter days pushing mortgages from the subprime market. We got Bill who repealed Glass-Steagall. And, the only people that really seem to be wanting to prosecute this is Judicial Watch. with all those FOIA requests and legal actions, because DOJ apparently seems to be at the lunch. So look, just for the record, lastly on this, the 13th Amendment of the Constitution, the Dems were 77% against it. The GOP was 100% for it. That was for abolishing slavery. On the 14th Amendment for citizenship and equal rights, the Dems were 100% against it. The GOP was 94% for it. And lastly, the 15th Amendment on the right to vote, the GOP was 100% for it. And you know what the Dems were. They were 100% against it. Oh, and Obamacare, it's not really health care. It's about central databasing the population and more. And that's imploding. So, Soros is a really scary road to go down.
TraderStef, Clinton has proven herself to be a big donor whore. And I guess I just want to ask you, with your thoughts as far as the president goes, how much more damage could she do, than she was already doing as the most powerful diplomat in the world as Secretary of State?
For Americans, for the United States, let's just focus on the Supreme Court. Just that alone. Because you know what's going to happen if she gets in. Look, let's talk about the Clinton Foundation just for a moment. 3% of the money that came into the Clinton Foundation actually went to charity. It's criminal. So look, what we got here with regards to Hillary and what she's going to do, she's going to continue to push the globalist agenda. And most recently, at a Trump rally, he had Nigel Farage from the United Kingdom come and speak, which was just amazing, because there is a correlation between what the voters did with Brexit and why they did it and what's going on in the United States right now. And that's why he spoke at that rally.
TraderStef, I want to, we're getting up on the 21-minute mark, and I want to get your thoughts here on gold. And as you put in prior interviews and even earlier than this interview, it was Japan, when they initiated NERP, that started the primary bull market in gold. So let's start off with your thoughts here on gold.
Before we get to the charts, both gold and silver, and I got some miners charts too. I don't know if we're going to get to those. I don't know how much time we have. But I'm seeing a lot of misinformation in the gold community with regards to the difference between bulls and bears market. And I put out a note on my Twitter feed, but I also supplied it here for this interview. You can put it up on your screen if you want, but I'll read it. And it doesn't matter what the analysts opine about with their market bull versus bear calls, because it's really just all noise. And I don't pay much attention to who they are, legend or not, because chart history speaks the truth, and it's not opinion. So here's the bottom line on gold, the way I see it. Gold's primary bull market, which is otherwise known as the accumulation phase, began in August 1999. So if you pull up the gold monthly chart, you'll see how it plays out. Let me get that up on my screen. All right. The current secular bull market launched in November of 2004, when the February 1996 high of 417 was taken out. And then it held there for several months. It didn't breach it. A primary bear market began in April 2013, when that 1522 low was taken out, which was actually a 1526 Fibonacci. And that was the base of a descending triangle that came off the high of 1921. And it broke down magnificently. It really started in the overnight markets in Europe and Asia, and then it just cannonballed, and you got all the stop orders that got triggered. But now we're back into a primary bull phase. Since the 2013 trend line has been decisively breached. And that happened in February of 2016, and it hasn't been violated. And there was a megaphone pattern that bounced along that trend line on top of it. Now, when and if the 2011 trend line is decisively breached, and currently it's sitting around 1350-ish, and depending on the time frame, if we go back in history, it was a little higher. As we go further into the future, the trend line begins to slope down. But right now, we're around 1350-ish. If we take that out decisively, then the 1921 high, if that is reached within the primary bull, which is going to continue accumulation, then the gold secular bull market trend will reassert itself, but not until that high is taken out. That goes for silver, too. It's the same game. Now, the most important time for the 50-day moving average or the exponential moving average, depending on what you like to use, is during a primary bull phase. And then you get a golden cross, a 50 over the 200, and a steady channel will assert itself. Now, I have another chart which lays out what happened between 2009 and 2011, and that was a serious primary bull where there was accumulation. It was kind of like a combination of the primary and the secular really getting its feet. And we violated that 50-day moving average 6 times. And if you look at the current chart, we're beginning to violate it again. That's really not a big deal. And we haven't even had a golden cross on the weekly chart. Now, the 50 or the EMA, whichever one you want, on the daily may occasionally breach, which I just pointed out. But breaches should be considered, BTFD, buy the freaking dip, opportunity in a primary bull phase. And there's a lot of money sitting on the side. There's a lot of Momo, hedge fund money. It's waiting for a decisive break over that 2011 trend line and a golden cross on the weekly. So with all that said, look, smart money has already gotten into the market. We can see that from the chart and what took place at the beginning of a primary bull. But the accumulation is due to NERP and gold's fundamentals, which I also have a chart which shows what the gold demand was out of China since 2007. You'll be able to see that. So that is what's going on with gold. And if you want to get into the specifics of the charts, we can do that now if you hit that monthly. Okay.
So, Steph, please go through some of these charts. I know we're looking at some gold charts here, some of the miners, the GDX. Please take us through some of these charts and, highlight what, we as interested investors and people in the precious metals community should be taking from these.
Sure. Well, if we pull up that monthly gold chart, what I just discussed about the difference between a secular bull market and a primary bull market and when a bear market's happening, I got it annotated here on this chart. And you can see going back to 1999 when we hit the low, and then we had the accumulation, and then we broke out right around late 2000, like 2004, 2005, we really began that uptrend, and we got into that channel, which really began to launch the new secular bull market. And then we put in the high of 1921 in September 2011, and the big bear started when we broke down in 2013, and there was a little triangle up there. It's like a triangle, and we got that bear, it's like a falling wedge, and then we hit the low, and that blue line that we hit the low on, that's the 150 exponential moving average. We never got down to the 200. When we pivoted off that moving average, we rocketed through that 2013 trend line above it. And that set up the megaphone pattern. And if you just pull your eyes down the chart, you'll notice the alligator tongue setup. And then if you look back in history to late 2001, where that setup happened before on the monthly chart, that's when momentum is starting to move to the upside. So that's just a confirmation that we've got momentum. And the other indicators down below also tell you that. In particular, look at the volume. In comparison, nothing compares to what we had in the past, the kind of volume that we're going on now. So if we move right on to the weekly chart, and I'm kind of zooming in here to see more detail, it's basically the same chart. And you're seeing where the 2011 trend line is up top, that dotted line coming down. But now we're in a pennant. We haven't violated that pennant despite the craziness that has went on over the past couple months, particularly last week with Jackson Hole. We held that line. Even if we break that line and go south, it could turn into a flag. You know, there's a big difference between a triangle, a pennant, and a flag, and a wedge. But pennant is still very bullish. Now, you can see here that 50-day moving average, the blue line, I've got it highlighted, and we've never violated that on the weekly chart yet. Now, we have violated it on the daily twice, but keep in mind, in a secular bull with primary bull accumulation, as from 2009 to 2011, it is not rare and it is not unusual for the 50 to be violated on the daily. That's good. That's a buy the freaking dip opportunity. Also on this chart, if you scroll your eyes down, you can see the DMI and the ADX. Got that alligator tongue set up with the black line coming from underneath. Price movement is very strong, going to the north. The high that we've put in so far is 1375. And then there are some horizontal lines, which are Fibonacci numbers. And I've got those broken down from which high and which low I drew those percentage numbers from. So you can see exactly where we are. And here's the problem for right now in gold. 1333 is a pigsty. When you look at the weekly chart, you can see we've been closing and opening on it. And it's kind of like the center line of that pennant formation. Just like when we had the megaphone, we had that center line through the middle. It was like around 1250-ish. And if I'm not mistaken, that's where you picked up from some positions, right?
And actually, that proved to be quite the buy the freaking dip opportunity for me there at the 1250 level. And, you know, I've been buying ever since, though, because I do believe gold is destined to be much higher. Steph, silver is around 1860 at the moment. And in previous interviews, you've said that silver needs to decisively break 2134. So let's go down, you know, your thoughts on silver here.
Oh, sure. So as far as primary bulls and secular bulls and bears, you know, you can just transcribe that onto this chart. It's the same deal. There's just different price points. But you can see the move where we had a high back in 1998 for 790, and we put in a low for $4 in late 2001. So that's right where the primary bull started, because people started to accumulate money. And we really didn't get into a secular bull until we took out that 795. We ran up. And then in 2008, we hit that high of 2134. Now, coincidentally, when you take the high that we went to of 49.78 and you do the fibs from the $4 low back in 2001, there's a fib there for 21.49. So somewhere in that 21.34, 21.49, you'll notice that several months after that, we retested that 790 level, bounced off of it, never violated it. When we took out that 21.34, 21.49, that was the rocket shot. So let's fast forward to today and where we're at. Same deal. We got real close to that number. We took out all the moving averages on the monthly. We've got an alligator tongue down on the bottom. And you notice that the bear market that we had, looking at that history going back a few years, it really wasn't a strong trend to the downside. Despite the price fall, when you look at the ADX and the DMI, it was just kind of messy. You know, bottoms are messy. Volume increasing, blowing away everything relative to what we had in the past. And if we quickly move on to the weekly chart, we can zoom in on what's going on right now.
So, Steph, in like a summation for what we are talking about here, we are talking about once gold breaks the trend line, we're likely seeing a moonshot. And once, you know, silver breaks that trend line. Similar to gold, around the 2134, we're going to likely see a big move up as well. So just give us an idea of what this might look like going forward, and kind of why right now is an opportunity to get in before we start breaking through these key resistance levels.
Yeah, for me, right now, I would be paying attention to what the price movement is going to be doing over the next 2 weeks as far as adding any position. And when you look at both charts overall, we got silver, we got as high as 2113, and we got to take out that 2134, 2149 level. And it'll be a rocket shot, but, it's not going to happen overnight. But who knows? Anything can happen, because there's a lot of chop that we need to work through from the past, a lot of resistance points. But it's going to move quickly, so you need to be positioned ahead of time. And with regards to gold, it's similar, not the same kind of resistance. With gold, we've got the trend line that you draw all the way down from 2011. And we've been bumping into that for 2 months now. Now, once we take that out, there's some resistance points, but it's a clear shot back to that high of 1921. And look, back in August, we put in a high, in August of 2011, I'm looking at my sheet here, we put in a high of 1912. It wasn't until September that we put in a high of 1921. Now, during that August, that was a $300 month. So things can move really quick. You can have major RIPO moves along the way, but most importantly, when we hit those psychological levels, like the $49 on silver and the 1921 on gold, there's going to be some selling, but it's a psychological barrier. There'll probably be some profit taking, and depending on what's going on in the world, the much bigger picture will determine where we go from there. But it'll be very interesting, and I'm looking forward to it.
And something you just pointed out to me, and when you put it in these terms, it makes a lot of sense. I mean, we've moved $300 in gold over the last few months here, and we're roughly $600 away from gold's all-time high. So we're really not that far away from hitting that all-time high and then ultimately breaking through it.
No, we're not, and the fundamentals are so much stronger than they were before, and the geopolitical climate in the world is much more unstable. So, anything goes.
Steph, when it comes to then the key price points for investors to be paying attention to for gold, we're really looking at 1921, and for silver, you're saying 2134, and beyond that, it's potentially a moonshot.
Yeah, well, with gold, we got that trend line coming down from 2011, and that ties right in to the recent high we put in at 1375. So we're just like banging into that trend line drawn down from the 2011 high, and that'll get us up to 1921. And it's going to be a lot. There's going to be a lot of opportunity between now and then. Who knows how it's going to take place? How many RIPO moves we're going to have between now and then, which would be a $100 move in a 24-hour period in gold. And in silver, that would be anywhere between a $1 and $3 move in silver in a 24-hour period. So it's very frustrating right now, but that's how the market is. It's never a straight line up, and it's never a straight line down. You just need to be patient and pay attention.
Steph, so in conclusion here, I just wanted to ask you this. I know you lived in New York City, and you happened to be in New York City during 9/11. So I just want to, share your story here, or just some brief thoughts here about 9/11 being in New York City.
Fortunately, or unfortunately, depends on how you look at it, I had been laid off from the job that I was working in because of the dot-com bubble, and I actually visited the World Trade Center in August based on a severance package, to get your resume together, make your contacts, do that whole thing when you're looking for new work. I still got the ID, because when you used to go into the World Trade Centers, they took your photograph and you got a plastic ID card with your picture on it, and you were restricted to specific floors. They did that after the 1993 bombing that occurred in the basement. So I still got that ID. It's kind of emotional when I look at it. But I wasn't in town on 9/11 because in networking for work, I was working on a job in Washington, D.C. for a week. And actually, instead of having someone take care of my cat in my apartment in Brooklyn, because they gave me a rental car, I decided to take her with me and then stay with my family just outside of Baltimore. And I commuted back and forth between Baltimore and D.C. I was on the Beltway just outside the Pentagon when the plane hit the Pentagon. Now, I didn't see it, but we continued our job that day, which our target point was Reston, Virginia. We did a video shoot. I couldn't get back until, I think, 7 o'clock at night. They finally reopened the Washington Beltway, and the roads were completely empty, and all those digital signs overhead was like, I-95 is closed, all the way up to New York. And I couldn't get back to New York until the following week when the Verrazano Bridge from Staten Island to Brooklyn finally opened. And when I got back, it was a different town, but there's a lot of information out there about what happened with 9/11. Inside job, outside actors. I think there's a combination of a lot of things going on, but what really hit home for me was a very dear friend of mine coming back into New York over the Verrazano Bridge was a dear friend of mine who lived. He didn't die, but he was working in the World Trade Centers at the time. And he happened to not go to work that day, which is a story you hear from so many people because he had some appointment, he was running late, he never got there, but he lost a lot of people that worked with him. And he's currently a chief operating officer at a major brokerage firm in New York. But during the weeks running up to 9/11, that building was shut down on weekends for quote-unquote security reasons. And work was being done on the interior of the building. So, there's just a lot of things you can go into, whether it be pilots for truth, architects for truth. There's so much information that you can go into out there, and everyone will come to their own conclusion. But, my conclusion was the official story is not what happened.
Yeah, no, that the official story really is quite disconnected from the facts. And, thanks for sharing some of that information with us. And, maybe at a later time we'll get even deeper into some of these things that did go on in 9/11. So TraderStef, everyone, if you would like to reach out to her, you can follow her on Twitter at TraderStef. TraderStef, any last thoughts that you'd like to share before we end this interview?
Yeah, be careful out there. It's going to be volatile, and there will be repo moves.
Repo moves there shall be. Everyone, thanks for joining us today at crushthestreet.com. We'll talk to you soon.